Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth, and become financially independent. My name is Becco, and my partner, Henri.
Hello.
Awesome. Thank you guys for joining us. This is the Value Investor TV podcast. In this episode, we're going to be talking about the L brand. It's a collection of pretty well-known brands. It was actually this company was actually submitted by one of our listeners. So thank you for submitting that request over Twitter. And please do follow us on Twitter. And if you have suggestions like him, please do send it over via Twitter. Our handle is Value Investor TV, or our email info@valueinvestor.org. So let's start us off, Henri. Why don't you give us a quick disclaimer before you start?
Yeah, so, this podcast is designed to help educate you in the way that value investors, practice their craft. It is for educational purposes only. We don't know your financial situation or have any knowledge of how, of your finances. So before making any investment decisions, consult a financial advisor.
Excellent. Thank you, Henri. So let's get started. As you saw in the title, L brand. So what do they do? What do they do, Henri?
Yeah, so this is a company that you're probably familiar with, just not with the parent company, but with their children, child brands, which is the main one is Victoria's Secrets and Bath and Body Works. So those two companies, if you're not familiar with, Victoria's Secret, it's a women's, lingerie, sleepwear, gifts, and etc. And they operate into two different categories within that brand: Victoria's Secret and Pinks. So Victoria's Secret is all women. Pinks is more geared towards college age kids. And, Victoria's Secrets operates 1,200 stores, U.S., Canada, and Ireland and China, and 400 stores in 70 other countries. Mm-hmm. And Bath and Body Works is has a couple of sub-brands also, White Barn and Bigelow. They have 1,700 stores, U.S. and Canada, and 250 in the rest of the world. So, for a while, L Brands was actually a conglomeration of a lot of different fashion lines. Express was one of the companies that were on there. So they've kind of divested themselves of a lot of those brands over time, and now they are, they're focused purely on the Victoria's Secret, Bath and Body Works line. And actually, in 2018, they closed down La Senza and Henri Bendel. I don't even know how to pronounce that. Like we've talked about with a lot of these retail companies, we've done this with Canada Goose, Skechers, and so on. Levi's, they have company-owned stores and franchise and licensed wholesale agreements. So, they're going to be selling to somebody else who's then selling their product, which means when they ship the product is when they record revenue for those, and then in their own store, it's when the customer actually buys it and takes it home. That's their, or when they ship it to the customer is when they recognize revenue.
Right. So you said, obviously there are a lot of brands there. So just to summarize, the Victoria's Secret, Pink, Bath and Body Bath Work or Bath Body Work?
So it's Bath and Body Works, and I'm going to probably say Bed Bath and Beyond at least 5 times.
It's
here.
So similar.
We'll make it a drinking game. Every time Henri mistakes the brand, you guys have a beer. So
it's so similar. So, anyways, these L brand is, again, like Henri said, it's a collection of these child brands. Victoria's Secret is the most well known here, and they have pretty global presence, as Henri mentioned, but one of the things that they are doing, which I found interesting, is they're divesting a lot of the underperforming assets, such as Express, such as a tube that you mentioned earlier. So it's really, it's a retail giant that has these small child brands that is well known, but the parent itself is not well known. It's just an umbrella company. So let's dive into some of their competitive advantage. So as a conglomerate of retail clothing retail and some other stuff, personal consumer products and things like that. What kind of competitive advantage do you think they have over others?
Well, that's the interesting part of this. As you see us go through this process, what you're going to find out is they don't have much of a competitive advantage. What we thought was a strong competitive advantage over time has kind of evaporated with their lack of ability to keep their customer coming back to the store. For a while, I think Victoria's Secret had a very powerful draw to the customer. They would be coming in, spending money. They were doing all these promotional things where you'd get a postcard in the mail, you'd come in, get a free, whatever, and then you'd also buy a bunch of other stuff. And over time, what we're seeing is, I think, because they're located a lot in the store or in malls, the traffic to the mall has kind of decreased, and then that has led to a lack of traffic to their actual stores, and that's led to a decline in sales over the last 4 or 5 years. So, I think their strongest competitive advantage is still their brand, which is Victoria's Secret. I mean, I think, they still run a fashion show, that's one of the most watched, TV events. They have a lot of credibility, as far as, you think lingerie, that's where, people go, is Victoria's Secret.
Right.
And they have other things like beauty products and fragrances and so on. But it's not they don't have a monopoly on that, right? You can go and get these things at, the department store. You can get it online, that kind of thing.
Yeah.
College-age students are not, they're not going to the mall as much anymore. So that kind of changes the dynamic.
Yeah.
Now, they are seeing stronger, uptake in their online sales, which helps, offset some of this. But I think what that is it's kind of cannibalizing their own market, right? The people who were coming into the store are just buying it online. On the flip side, Bath and Body Works is actually growing really well. They have, for those of you who aren't familiar with their things, because, like me, I've never been into a Bath and Body Works. They sell a lot of, shower gels, lotions, aromatherapy, home fragrance, lotions, things like that are kind of, you get these at you'd probably find a lot of this stuff at like Ulta, which we've talked about before. They have a lot of their own brands in that market, in the store.
Yeah.
We go down that list though, network effects, switching costs, low cost, moat, intangible assets, they don't really have much other than the brand, right? I think that's the only thing that gets people coming back to the stores on a repeat basis is the brand. So, I don't see a whole lot there other than that. Yeah.
Yeah, it's interesting. Brand, like you talked about Victoria's Secret as this kind of iconic brand for lingerie. And, obviously, when I was growing up and still now, Victoria's Secret is definitely up there. I wonder what the management has to say about the decline. It is still a very iconic business. Did the management mention anything about their explanation as to why the decline in sales, aside from perhaps what you mentioned about the mall situation?
Well, I think a couple of things that I was impressed with when we, reading their annual report is they were pretty open about saying, these are the metrics that we look to improve upon. We are underperforming significantly in these areas. And, they kind of highlighted them and said, we need to grow our business in North America. International is really not much of a driver for them. They're not making a whole lot of money on an operating income basis. And they need to really focus, on fixing their problems, right? That the customer is not, the merchandise is not resonating with the customers. What I heard a lot of them, say, which is, frankly is terrifying, right? Like you have a business that is making something and they are losing touch with their customer.
Yeah.
Now on the flip side, Bath and Body Works doesn't seem to have any problems with that. They they mentioned that was one of their strengths, is that they know their customer very well. Well, what is the problem there with Victoria's Secret? Why are they not able to, kind of
attract?
Understand their business, their customers, right?
Yeah, it's so interesting. Like you said, the merchandising. Once you go south on that, it's just down a decline from there. Really, I mean, we saw from a few companies that we analyzed, right? Francesca is one of them that just pops into my mind. If you miss that for several consecutive quarters, it's just you're losing customers at that point, and it's very difficult to come back from that. Yeah,
and I think what the danger there is that the customer just has given up. Basically,
Mm-hmm.
they like I'm not gonna. I've gone there 3 or 4 times and never found anything, so I don't go back anymore.
Mm-hmm.
Right, and after you lose them, you have to reacquire that customer, right? And so, that means that your emails are going to fall on deaf ears. Your, TV ads, all of that stuff, kind of disappears.
Right.
So, it's not insurmountable, but it's certainly now a bigger problem that you have to get them to come back to the store.
Yeah. One thing that is unique about this company compared to, what we looked at last time, several companies, like, for example, Skechers or Canada Goose, is that this company is a holdings company, right? It has Victoria's Secret, Pink, Bath & Body Works, and so on. Do you think there's any tangible kind of competitive advantage that you get from being a holding company? Any sort of like cost-cutting measurement, anything of that sort?
No, not really. I mean, not in this space. I think what you benefit from here is you can maybe have shared warehousing space, so you can reduce some of the costs there. You can maybe have some additional benefits from supplier, to stores, but they're supplying their own store, so they can't go to a Walmart or someone and say, "Hey, we're really big. We have all this thing. These things give us premium shelf space or what have you." So I don't see a whole lot of benefit from having aggregated multiple brands there.
Right.
There's no real, there's some benefit, but not a tremendous amount. But, I think just to kind of give you an idea of how 2018 kind of hemorrhaged, their customer base, their comp sales. So comp sales is the comparative sales. So if a store has been open last year, you compare it to this year's sales, and their sales decreased only 2%, but their operating income declined by 50%.
What? That's crazy.
Yeah. So
what happened?
So what they're doing is essentially saying the merchandise doesn't resonate with the customer. Let's discount it because that's the only way we're going to get rid of this inventory. And then by discounting it, what they've essentially done is they've made they cannibalize their own product, so their gross margin drops, then their operating income gets hemorrhaged. Now it's there's more to it than just that. It's not just the merchandise that's causing that. They're increasing operating income to staff up for China and these other things. But I find that interesting that
wow,
when you look at their college brand, Pink declined by mid-single digits on a comp sales basis, right?
Wow.
That's a fairly significant, decline. When you look at Ulta, they were having comparable sales store growth of positive 8 to 10 to 12%, and these guys are losing 6 to 8 to 10%. Victoria's Secret Beauty lost double-digit comparable store sales, right?
Jeez.
So it's just it's not resonating with the customer. Now you look at Bath and Body Works, so I mean this is the tale of two cities essentially. Comparable sales increased 11%, and operating income increased 13%. Their direct channel sales, which is their online sales, grew 30% a year. Now it's a much smaller part of it,
right?
And they said that specifically the stores that they remodeled had huge sales growth, right? So, one of the benefits of not co-branding Bath & Body Works and Victoria's Secret is, if they rolled Bath & Body Works into Victoria's Secret, you may dilute the good brand with the bad one.
Right.
Right.
Yeah.
So there is some benefit there.
Yeah.
To keeping them separate.
Right. Yeah. This is kind of crazy that Victoria's Secret, the operating margin went down 50%. That's insane. That's pretty crazy. And at the same time, Bath and Body Works went up, quite a bit. 13%, 11%, like you mentioned. Wow, interesting. Very interesting. So I guess it makes sense to kind of separate them out. And to me, when you said, Tale of Two Cities, it almost reminded me of kind of a, spin-off strategy, potentially down the road, just as, thinking about the corporate structure, thinking about strategy as a investor and therefore as an operator, you kind of think about what is the maximum way to return shareholders, to give shareholders the maximum value. If Bath and Body Works is doing well and Victoria's Secret is lagging a little bit, maybe it's time to spin off some things. I don't know. It's just a thought that came into my mind.
Yeah, I mean, I think we as investors would want them to take the tarnished brand and separate it from the good brand, right? So spin off one of them and keep the other, and that way you can let the good brand shine,
right? And
then focus on fixing Victoria's Secret. Now they have their own management, Bath and Body Works and Victoria's Secret does. So, but what's resonating with the customer is the smaller company, the more agile, business.
Yep.
That's more differentiated, I think, in some ways. So,
right.
I think this is not dire straits for them, right? Well, until we start talking about their debt levels, then we'll have more to discuss there.
Yeah.
But just to give you some more kind of color on operating income for from this. So in 2016, their adjusted operating income. So this is adjusting for one-time things and so forth. 2016, $2.03 billion. And adjusted net income, $1.09 billion. So adjusted earnings per share was $3.74. So fast forward to 2018, so $1.4 billion, down from $2.0 billion in 2016 for operating income, $1.0 billion down to $780 million for net income, and adjusted earnings per share down from $3.74 to $2.82. So,
wow,
you essentially cut off, a third of their sales or a third of their profit by having, 25% of their sales by having, this missteps that they've had, in the last 3 years. They take a fairly significant haircut as a result. So,
right.
They're propping up sales, but I would say to what benefit are you doing that, right? Your merchandise is not resonating with the customer. Doing a huge discount may bring them in for a little while, but it's not really fixing the problem. It's just a salve, right?
Right. It's just
a temporary measure.
Yeah. It's just a kind of a Band-Aid solution for this problem, it sounds like.
Yeah.
Yeah. And we'll talk more about kind of the financials and in that aspect, kind of the inventory management, because once you'll see a lot of companies that I've seen a lot of companies where when the company is not selling, when the company's not doing so hot, the inventory starts building up and they have to discount all their inventory out to just clear them away in the inventory. And having a lot of inventory, like having, very clean inventory management is very, very important for retail. And I just wonder what that looks like for Victoria's Secret and Pink. We'll talk more about that. But let's go back to our discussion about competitive advantage here. Do you see any, I guess, so the next question in the Value Investors checklist here. Also, before we move on, if you don't have the Value Investors checklist, please email us at info@valueinvestor.org, info@valueinvestor.org, or reach out to us on Twitter, our Twitter handle, Value Investor TV. Okay, let's get back to the checklist. So how durable is the competitive advantage? I think we kind of talked about that. But if you want to add a few words here, Hari?
So I would say that Bath and Body Works, I think, is doing well, has a good competitive advantage because they're able to continue to get their customers to come in. I don't think Victoria's Secret is actually quite as bad as it sounds. I think the problem that they have, because their direct sales are still continuing to grow, 16% a year and 30% for Bath and Body Works. So it's just they're changing, and this transition for them from a retail store to an online and plus retail is painful.
Mm-hmm.
And I think they need to be more aggressive if they can to shut down these stores.
Mm-hmm.
But right now it's there's certainly a lot of things in doubt about their competitive advantage and that durability. So, and I think there's lots of risks there, right?
Mm-hmm.
That this continues to erode further.
Right. Yeah. So let's move on to the next question, which is, what is the company's long-term prospects and runway for growth? So you mentioned, expanding into China and different areas. Obviously, that's a room for growth right there. But what does it look like, I guess, for the entire company?
Well, so I think this is kind of where we need to start talking about how would you capitalize that growth, right?
Mm-hmm.
I mean, right now your biggest problem is that your customer is not coming into the store.
Mm-hmm.
Do you really want to focus on growth at this point? And maybe the international market will be a savior for you, but it's very small right now compared to the the overall business. International is actually losing money on an operating income basis, and it's an order of magnitude, several orders of magnitude larger. So I think you got to fix whatever is going on, and that means you're probably going to be shrinking your sales to fix some of this overhead that you have that's weighing down on your profit right now.
Mm. Yeah, that's interesting. Growth at what cost, right? Is the question. Growth at what cost, right? Or if you're growing just to grow, it's not really doing any favor for your shareholders. And I wonder, because of this, I wonder what the incentive structure looks like. But we'll talk about that in just a bit. All right, let's move on to the next question, which is, does the company require a lot of capital reinvestment to maintain its business? Can it grow without any further reinvestment?
Well, I don't think that's the case. I mean, when we look at their capital expenditures, they're going to spend about $500-600 million a year to remodel, and maintain their stores. So there's definitely a lot of that they have to worry about. But I think the bigger problem for them is, you still have to understand, you have to fix the business, right? I think that's the thing right now. And, when we talk about their finances, we're going to see that they have quite a lot of debt already. And so I think the survivability is not, they're not threatened right now, but in the next few years, it may become a problem. And if their operating income continues to decline, they may not get favorable terms for their debt, for renegotiating debt and that kind of thing, or may not be able to pay it off. So I would be concerned about that kind of stuff right now. And let's not worry about reinvesting to grow or reinvesting to what do you need to do to maintain, and what do you need to do to benefit your going forward.
Right. Yeah. Again, going back to the question of long-term growth, I guess the growth at what cost? And right now, the problem at hand is fixing the business, like you mentioned. Expanding into other markets and things like that. It's important, but right now, fixing the business is a problem of a higher order, higher magnitude, and for this company, it looks like. All right, the next question we have on the checklist is, does the company have favorable relationships with the following: customer, suppliers, employees, regulators, and community? Any outstanding issues there, Henri?
So, I think obviously Bath and Body Works, I didn't say Bed Bath and Beyond. Bath and Body Works is doing well, and I think they have good relationships, and they understand their customer. I'm worried about that from a Victoria's Secret standpoint. But these other questions, suppliers, employers, they're not a regulated business. I'm not too concerned about that stuff. Yeah. But I think there's, if you're a shareholder here, you have to really ask yourself, what is this company going to look like in 2 or 3 years, right? And these kind of things, I think a good example of this, was GNC. They kind of had a very similar story about they loaded up on debt. They were using it to do a share buyback, and the stock price went from like $60 a share to like $3 a share in about a 2 or 3 year period. And because there was concerns about their ability to pay down debt. And they had similar kind of ratios, that Victoria's Secret, Bath and Body Works has. Now the difference is that Victoria's Secret is the only problem here. Bath and Body Works is doing well. So could they sell Bath and Body Works to get, to another company and then, kind of fix this? We're going to have to, it's going to be a wait and see, I think for me right now.
Mm-hmm. Yeah, it's very interesting. I think one of the reasons why one of our listeners suggested this was because the stock price precipitously dropped the last 2 years or so. It's definitely, I think that's a good habit, right? If a stock price goes down precipitously, you got to question this, but it's also a good opportunity to take a look. And if there's a good deal, it's a way to become a good value investor is by looking at the discounted companies, but not necessarily discounted if the company's not doing so well. So it's always important to dig deep into those things.
Well, and I think the other thing here is, just as investors, you're going to read a lot of annual reports that you're never going to invest in those companies, right? I mean, I don't know what the ratio is exactly. It may be 100 to 1. It may be 500 to 1. It may be less, but really every time you pick up one of these annual reports, I learned something, right?
Oh, yeah.
I'm telling you I've read, countless number of retail companies even, and every time I read it, I'm amazed that I've learned something new, right? And so I would say every time you see something, you see the price drop, and you go and investigate, come at it with an open mind, learn as much as you can from that, because it may not apply to this business that you may not invest in, but you will find yourself using that knowledge somewhere else. And I think it's very valuable to run this exercise, right?
Absolutely. And that's why we're here for you guys. We are doing it for our own benefit, but also for the community, so that you guys can follow along and learn with us as we try to become better value investors. All right. I think this is good for now for this episode. Anything you want to add, Har, before we close this episode out?
No, I think I think we got pretty much everything covered here. Mm-hmm. But we're going to talk a lot more about financials and management and valuation for a business like this. So hope to see you on the next one.
All right, stick around, guys. We'll see you on the next episode. Thank you.
Thanks.